From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. Well, what an interesting day on the market. We started off on such a positive note. We had, of course, the Nasdaq hitting that 20,000 point level overnight, really delivered by growth in tech. Tesla up by 6%. We started out on a positive note, but you can see where we started to dip, and that was bang on 11:30 when the jobs data came through, and that was really once again a shock decision coming through in terms of labour force data. Much more jobs added to the economy than was expected, sending the unemployment rate to 3.9%, so back below 4% for the first time since March. I was on set with Paul Brennan and Ileana from Suncorp, I should say, and Ileana Jane from Westpac. Really great panel discussion. You can find it on ausbiz.com.au if you missed it. And Paul Brennan said to me, look, this is almost like a miracle economy. We're meant to be slowing down. You're meant to see weakness in the jobs market. Instead, it remains incredibly tight. A number of jobs created in November, although there was that seasonality factor. So we saw amidst that miracle economy, the market fall and the Aussie dollar spike back above 64 US cents. Of course, this all playing through into what the RBA will do next. We were starting to get a 70% chance, according to money markets, that there could be a February rate cut following their dovish tilt on Tuesday. But this strong jobs data now has money markets pushing out probably more a 50-50 chance that we'll see a February rate cut. And both Paul and Ileana were sticking with their calls. Remember, Westpac, one of the three out of the big four that say the rate cut, the first one will happen in May. CBA still says February. Goldman Sachs still says February. And of course, next up, the ECB tonight. They're expected to cut by 0.25%, similar to what we are expecting from the Fed next week. Let's have a look at what we saw in terms of sectoral moves today, kicking it off with utilities. There was quite a bit of weakness coming through from the likes of Downer EDI, dragging down that sector. AGL off by 1.3%. Industrials as well. Flipping it over to have a look at how they performed. Cube Downer EDI there, of course, down by 6.3%. And the REITs, they were the best performing yesterday. A bit of a pullback today. Goodman Group down 0.6%. Centre off by 2.3%. And kicking it into the reasons why we saw the weakness from Downer, the ACCC starting civil proceedings against Downer and Ventia for alleged price fixing for services at the Department of Defence. Ventia down by 23%. Pilbara hire Chief Executive Dale Henderson becoming the latest director to load up on holdings in the embattled lithium producer. Syrah plunging the other way, declaring force majeure at its site in Mozambique due to nationwide protests. And the glass bottles and cans maker Aurora retreating following the $1.7 billion sale of its North American business. We also saw Spark New Zealand hire following the sale of its remaining stake in Connexa. And oOh!media, Australia's largest outdoor media company, falling after it announced cost cuts of at least $15 million in response to that, quote, challenging market conditions. All right, let's welcome with his hat Henry Jennings from Marcus Today, bringing us some potential scented shear. Oh, it's behind you, not on your head. Hi, Henry.
Hi, Juliette.
A bit of
I can do both.
You can do both, whatever you like, whatever's more comfortable. Good to see you. But we saw, of course, a dip coming through today on that strong jobs data.
Yeah, it was interesting, wasn't it? I guess yesterday, well, on Tuesday, I guess that we got the RBA talking about the dovish tilt. It was kind of a seasonal turtle dovish tilt, but it actually turned into a mock turtle in some respects today with that jobs number, 3.9%, which is a long, long way from where the RBA really wants to see that unemployment number, which, you know, it always seems a bit perverse that they want to see it at 4.5%. They want to see more people unemployed. But what was really interesting, I guess, which was despite the number coming in 3.9% on the headline number, once again, the jobs that are being created are mainly due to government stimulus and government spending in things like healthcare, education, disability services, and public administration as well. So they're not going to add to the GDP. Of course, they do help the economy, but they're not as productive in some respects as, say, manufacturing jobs or private sector jobs, for instance, which are still slowing. So it was kind of a mixed figure, but the market took it somewhat badly. We did have a good lead in from Wall Street, and here we are going to close down some 19, 20 points on the ASX 200. So it did kind of take the spring out of our step, shall we say.
Yeah, and really interesting, of course, the move up in the Aussie, down in the equity market. Gold miners, though, looking really good. We're continuing to watch gold play continue to rise, I should say. Perseus, I think, up by 2%. Newmont looking really good as well. What were you looking at today, stock specific wise?
Well, I think, the gold sector has been pretty good. The bullion price overnight was good. And in Aussie dollar terms, even with a little bit of a rally up towards the 64-cent level, the Aussie gold price still above $4,200 an ounce, which is pretty extraordinary. I think there's going to be some champagne corks popping around the Christmas tables in WA this year. So some good news there. We also had some good news. One of my favourites, Southern Cross, today as well. That was up seriously again. It was only a couple of weeks ago. The stock was $2.80, and here we are at $3.80. 4.20 actually today, up 11%. And the Victorian government getting very much behind the mining industry in Victoria. So there's some good news there for Southern Cross. They're also at the moment completing a somewhat complicated merger of equals between them and Mawson Gold, which will end up with a dual-listed gold company in Canada and here as well. So that is an interesting one. And, there has been some good moves today. Pilbara was interesting on the basis that Dale Henderson was buying 500,000 shares in Pilbara. So that was obviously a vote of confidence in there. But, it's kind of been a bit of a disappointing day, I guess. We started out so well and then finished in a little bit of a limp fashion.
Yeah, it was kind of a bit of a disappointing session. And after we had that really good lead that you mentioned from Wall Street, I mean, some incredible moves here. Elon Musk now worth a cool $400 billion on paper. Some of our tech stocks looked quite good. Block was coming out of the boxes today, or out of the, what am I trying to say? You know, when you're running, you help me out.
You're
Blocks.
coming out of the blocks. I mean, that's it. The starting gun goes off. You fly out of the blocks. I guess, for Square, SQ2 or Block as it's called, going back to the starting gun, it's very much geared to the US economy. It is also very much geared to the Bitcoin price as well. A substantial part of their income comes from crypto. So, when we see Bitcoin going above 100,000, that is good for Block. So, that's certainly helping. Interestingly, we did see, I think it was yesterday, we did see some weakness in some of the platform stocks. But today we're starting to see a little bit of strength creeping in to one or two of them. And we did see HMC as well with a bit of an upgrade doing well. And of course, tomorrow, Juliet, is a red letter day in IPO land, because I believe it is the biggest IPO of the year, sneaking in before Christmas with Digico, which is that global data center business. So that's going to be really intriguing to see how that one goes. And there is a lot of book squaring, there's a lot of tidying up going on, there's a lot of capital raisings, a lot of people trying to get in, the last gasp, I guess, before Christmas. We saw it with a sell down with one major shareholder, Cat Rock in Satire today. So there's a lot of people just trying to, I guess, rule things off before the Christmas break at the moment.
Yep, indeed. Thank you for helping me out. Surprisingly, Henry, I was not that good at PE at sports, so I forgot that.
Really?
No, I know. What a shock.
Wow.
I used to hide.
Spoiler.
I used to hide when PE was on. All right, let's have a look at some of the other moves that are happening today. Ventia and down at EDR. What did you make of that? I mean, that kind of dragged down the industrials today.
Well, you're playing the puns, aren't you? Yes, it certainly did drag down the industrials. Ventia got whacked nearly 23%, so a big drop for them. So clearly, the ACCC is very much targeting Ventia. And I guess, they are probably more exposed in some respects than Downer, which has got a far more diversified business. So that's going to have an effect on both of them. That's certainly going to spoil their Christmases. So, it may be a little bit overdone today, and Friday, tomorrow, we may see a few of the shorts that have been day trading it today, buying some back, but that's certainly got a little way to run. So I wouldn't be going too near that unless you're a very aggressive trader.
All right, Henry, appreciate your insights as always. Have a good rest of day. Henry Jennings there from Marcus Today. Well, of course, we were talking about oOh!media, and that was the stock of the day. Andrew was joined by Mark Gardner from MPC Markets and Sanjeev Narendran from Tip Group.
Cutting down 15 million, is it really going to make such a huge difference? A company like this, the returns haven't been that great. I mean, return on equity is consistently pretty low, under 10%. They haven't been growing their earnings, so and they do carry quite a bit of debt. So when things are hard, like they're acknowledging that it is right now, they don't have many levers to pull to navigate through this. So I think they'd end up feeling quite a bit of pain before things get better for them.
I don't think you need to be there right now. This thing will have an uplift when the economy's booming and there's a real bull, a real economic bull run. But if we have any sort of potential recession risks or whatever, this is not the place to be. I think you're probably better saving yourself the grief and just keeping it on your watch list.
All right, an interesting day on the market. As we mentioned, we sold off once that jobs data came through. Let's have a look at the market leaders. Beach Energy did well with a gain of 9.2%. Block, Henry and I were just talking about that, of course. We had that huge move coming through from tech players overnight on Wall Street. HMC Capital helped out by a broker upgrade from Morgan Stanley. They've got their price target at $12.98 now. And Pilbara Minerals jumping after Chief Executive Dale Henderson became the latest director to load up on holdings in the lithium producer. To the downside today, we saw Ventia and Downer EDI. We just chatted about that with Henry. Of course, the ACCC starting proceedings against both companies for alleged price fixing. Eagers Automotive, also one of the weaker performers following an update. I think it may have actually even hit or close to lows today. And Alcoa and Chalice Mining under pressure too. In the small end of town, Pan-Continental Energy having a good day. Ausgold up 6.5%. You can have a listen to my chat with Barry Dawes online. Will be up shortly for some of the gold players he's looking at. And then to the downside in the small end of town, Syrah, we talked about that, some concern about its site in Mozambique due to civil unrest. Platinum Asset, Comet Ridge, Peter Warren down 11.2% on an upgrade, and Tivan off by about 11%. Tonight, the ECB comes through with its monetary policy decision. We're also getting PPI or factory price data for the US. And then tomorrow, Friday, we're going to hear from RBA Assistant Governor Sarah Hunter. Often a bit of a quiet day in Australia on Fridays. All right, let's have a look at the market. As you can see, 11:30 was when we started to sell off. We had a positive start to the session on the back of that lead from Wall Street. The better than expected jobs data having traders pare back their expectations of a February rate cut, and then that saw the market sell off and the Aussie dollar rise. So we're finishing there on the CBO 200 at 1585, and I'll just get your read on the ASX 200. It is down 23 points, a third of 1%, 8,330.3 points. That's a nice number, isn't it? And Ventia and Dana were the biggest laggards today. All right, that does it. We'll be back with the ECB decision announcement early in the morning, and of course everything to follow. We should mention, of course, Did You Go REIT as well, that IPO, as Henry mentioned, hitting the boards tomorrow. We'll see you again tomorrow.